it would feel like the current market in terms of property in California is under a little bit of pressure just with, between the political environment, about industry pressures, just, global economic problems. What is going on in the world of real estate in our local area?
Yeah, yeah. Well, interestingly enough, we have been on a pretty steady, solid ground since COVID in the commercial real estate space. We've had steady growth in value appreciation of properties and in minor improvements or increases in rents, which help investors maintain properties more effectively if they have the revenue stream to do a better job of maintaining and repairing properties. The one exception, of course, is the space that you work in most, which is the wine industry, which is really the anomaly in the whole real estate, commercial real estate spectrum right now. So if you were to remove the wine industry industrial component from the overall industrial sector, we'd see a very different set of circumstances and data points. Generally speaking, the overall market is healthy and is active, and there's, I think, been some pull out of the stock market maybe in recent months. I think primarily due to people wanting to have a more predictable asset base, maybe just a more diverse portfolio. So I think we're seeing some of that. And then the third component might be that there's our population is also getting a little bit older, and we're seeing a lot more owners of assets across the country, and certainly in Sonoma County, which has a large retirement population. We're seeing a lot of the that that generation, my generation and older, liquidating assets, doing dispositions to cash out or pay off partners, or even to just where properties have been handed down within the family. Maybe the kids just want to cash out and have the capital to buy a home or something like that. So there are a lot of variables in play, but I'd say those are some of the more significant that are driving the commercial real estate market right now. The last one I'll mention is the owner user market. Again, with the exception of the wine industry, the owner user market buying buildings is very strong right now. The general economy in Sonoma County in the North Bay, north of San Francisco, is doing quite well.
It's really interesting to hear because you hear so much doom and gloom because of, the cost of capital is so much higher right now than it was just a few years ago. The interest rates going up is some of that being driven, like you said, opportunistically because people are trying to, so there's things on the market that have like historically not been available and people want to jump on that? Or do you think there's just a mindset shift from people going like, hey, we'll lease versus, hey, there's an opportunity to buy, so why not take it?
One of the things that's really driving the investment market for owner occupants of buildings is the financing, as you alluded to, is actually more attractive in some ways today than it's ever been, in the sense that business can go out and finance the purchase of a building for as little as 10% down through the Small Business Administration real estate lending arm. So if you've got a business and you don't want to invest a lot of capital into the real estate side, you don't have to. Resulting benefits are substantial in terms of depreciation, write-offs, various deductions that one can achieve by owning their own building. So that's driving a lot of the owner-occupant side of the purchase world. The other side being the investor, pure investor who's looking for return on investment, strictly looking for the ROI. That's a little more difficult to achieve when interest rates are obviously higher, but interest rates have crept down a little bit in the last year and a half. The playing field has become a little more level for investors and a little more attractive in terms of investing and financing properties, in the 2 to 25 million range or 1 to 25 million range.
So, I mean, would you generally suggest to people like it's a good opportunity right now to get into the commercial real estate space, or is it just, as always, just a decent place to put your money?
I think that as a business owner, it's always advantageous or almost always advantageous to own your own building because you control the costs, you control how you want to use the building. You don't have to answer to some other third party owner that is telling you can do this or you can't do that. And it gives you flexibility to say, well, if I want to modify my building because I'm changing my business model or whatever, one has control over that and one can write off those costs as part of their tenant improvement costs. I think that's the biggest driver of all, is just that control factor and predictability. From an purely investment standpoint, which is a different hat that, again, many of the investment purchasers wear, is that segment of the market might be a little more sluggish than the owner-occupant market, again, because of interest rates. But that's been countered by the fact that costs of buildings have leveled off, and in some cases, capitalization rates have gone up, which is cap rates being the return on investment for a buyer who's
Mm,
investing in a property for purely ROI. I think the market has adjusted to the interest rates. So where we have an interest rate of X, we generally have to have a cap. We'd like to see a cap rate, or an investor wants to see a capitalization rate that's slightly above that to give them some margin. I'll call it a profit margin or whatever the terminology might be, to offset the cost of debt service and have some operating capital to work with as well. And maybe capital or excess funds for reserves in for periodic repairs and maintenance. But the market's been sort of adjusting on the cap rate side to the interest rate fluctuations.
really interesting. Last piece on this. What advice would you give somebody who's considering entering in the commercial real estate space? Like what advice would you give them to make sure that they do it the right way?
Well, the first and most obvious answer from a commercial real estate broker is hire a broker.
Hmm.
So that you know what you're getting into, because there are great investments in commercial real estate, and then there are poor investments in
Yeah,
commercial real estate. And there's an old saying that goes, you don't make your money in real estate when you sell the property, you make it when you buy it. And the message there is, if you don't buy smart, you're never gonna see the benefits of your investment if you're looking 10 years out or something like that and say, well, I'm hoping to get a 6% or 7% appreciation on my asset while I'm also getting a 6% annual return. Well, that appreciation may not occur if you don't buy it right. Having the right tools in your toolbox, analytical tools, knowledge, market knowledge, financial analysis capabilities, and a good team. I'd say you've got to have a good lender, a good CPA, good real estate attorney, and ideally a good broker.
no, great advice. I always tell people if you're going to do anything, make sure you have a good, you know, like what is it, bench of professionals that can help you. So that is really, really good advice. It feels like, a lot of people went into the market, especially at the wine industry, without that bench of professionals, and a lot of people overpaid for assets. And I think that's where we're seeing some of the issues at the moment. Does that feel like a fair statement, other than obviously other, market driven issues? It does feel like to some people just overpaid and now they're stuck.
It's hard to say in the wine industry because it's the product that they're buying is so emotional and experiential.
Hmm.
It's not just like you're buying an industrial building and you're producing widgets. If you're buying a winery or you're buying a facility that has a tasting room and production facility and maybe vineyards on the property, there is more than just the bones of the building you're buying. There's a whole experience you're buying. So it's hard to make a general statement that many or most people overpaid. I think it has more to do with, and you know better than I do on this by far, I think it has more to do with great production and trends and buyer trends and consumer trends than maybe it does what they paid for the properties that they now occupy.
Fair. I'll take it.